So I think everyone's connected now. I'm Charlie, I work for Ideal Homes, and today we are doing the tax webinar for Portugal. So we have Luís from Atlantic Property, and we also have Megan from Rentals. So I'm going to pass you over to Luís, who is going to cover the taxes in Portugal for sales and rentals and everything else that a lot of people have been asking questions about.
Very well. So, hi everyone. So, my name is Luís, as Charlie just introduced me. I'm a director of Atlantic Property Tax Consultants in Portugal. We are a tax consultancy company dedicated only to the property market, okay, and especially for the non-resident market. Okay, we do some residents as well, but mainly non-residents interested in investing in Portugal. So, for today, what do we have? We're going to start talking about taxes on property. We'll talk about taxes on purchase, then ownership, and then sale of the property. And in the end, we're going to talk a little bit about the non-habitual residence scheme that maybe some of you already heard about. Okay? So let's start. Properties on purchase. Purchase of property in Portugal. The taxes here are pretty straightforward. Basically, you have two main taxes that you pay. You always pay stamp tax, which is 0.8% of your purchase price. Okay? And you're going to pay something called the property transfer tax. In Portuguese, it's IMT. Okay? And that tax is applied with we have brackets with several rates, okay, going up to 8%. And depending on the price of your property, you're going to pay a certain percentage. That percentage can vary between, let's say, 4–6% on average. Okay, but that then depends on the price of your property. All this information, if you don't want the tables and the brackets and everything, then we can provide this by email. That's not a problem. That tax can be applied on the purchase price of the property or on something called the property rateable value. What is that? That is the valuation that the tax office makes on your property, okay, regardless of the price of the property. They have a series of variables, location, quality coefficients, so on and so forth, and they come to a value, the value of the property, usually much lower than the purchase price, usually. But some cases, that doesn't happen, and you're always going to be taxed on the higher of those two amounts, okay? But rule of thumb, you're going to be taxed on the purchase price, okay? So, taxation on purchase basically is this. There's two tables of taxes. One if you're buying your permanent habitation, other if you're buying a house for holidays. And if you're buying a house for holidays, you always pay a little bit more tax than if you're buying your own habitation. Okay, so that's the only nuance here on when you're buying the property, and so it's pretty straightforward. These taxes are usually paid days before you make the deed. And that's it. You need to show the notary that you've paid those taxes, and the property can be transferred to your name. So taxes on property purchase, basically, it's this pretty simple. Okay. So let's go to what I think you're more curious to hear about, which is taxes on ownership. Okay. Before we go into the rentals, I just want to mention something called the council tax, which is a yearly tax that you're always going to pay, regardless if you rent your property or not. That I have to pay on my property. Anyone that has a property in Portugal has to pay. So just by owning a property, you need to pay your council rates, council tax. It's based on that amount, on that valuation that I told you from the tax office. So they define your value for your property, and then each council, in the beginning of the year, can define a rate between 0.3 and 0.5%. Sorry. They can define that rate is then multiplied by your property rateable value, and the council tax bill will come to you. Depending on the amount, you can pay that in 1, 2, or 3 installments, okay, along the year. So this is a tax that you always pay on property. Moving on to rentals. We can start with short-term rentals, okay, which is it's a little bit more complex to explain. So basically, what do you need? In Portugal nowadays, if you want to rent a property, you need to apply for a rental license. It's issued by the city hall. You need to show that you have all the security items in place. You need to show that you need to show all the documentation, the house to live, for the amount of rooms, etc., etc., and a rental license is then issued to you. In order to do that, you need to first open a sole trading activity in Portugal. Okay, you have to be a one-person company, so you have a sole trader, and you have two options. You either have organized accountancy, like a normal company, where you can put your own expenses, so on and so forth, or be in something called a simplified regime of taxation. My experience, organized accountancy doesn't really work in this area because you never have enough expenses to compete with the simplified regime, which I'm going to explain, plus the accountancy costs of having a company. So because every month you need to pay a fee to your accountant. In the simplified regime, how does it work? The tax office doesn't want to see anything regarding expenses. They don't care what's history. They're just going to assume that a percentage of your income is cost. In this case, 65%. So you made 10,000 euros. They're going to assume that 6,500 was cost. On the remaining 3,500, which is your net income, you'll be taxed at the flat rate as a non-resident of 25%. Okay, so this is the rule of thumb. 65 will be cost, 35 will be net income. You're going to be taxed at 25%. In the first 2 years of activity, they give you a little heads up, if you want. So instead of being taxed on 35% of your income, you're only going to be taxed on half in the first year, so 17.5%. So you have a 50% discount on your taxation, so to speak. On the second year, you're only going to be taxed on 26.25% of your income. And only from the third year onwards, the rule of the 65-35 applies for the future. Okay. Keeping on the taxation of the rentals, your income, if it's this is going to be starting 2021. This is going to be a year of transition. Before, this is regarding VAT. There was a limit for exemption of 10,000 euros. So if you made less than 10,000 euros, you can be exempt of VAT. You don't need to charge VAT, and you cannot deduct VAT. But if your income in a given year, so you open your activity today, you made 12,000 euros. Next year, you're mandatorily to have VAT and do your VAT quarterly returns and charge VAT at a reduced rate of 6% because it's touristic services. But then you can deduct the real expenses, although for the IRS, it's a simplified regime, but comes to VAT, you need those invoices, the water, the electricity, ideal homes, commission invoice. We can then deduct that VAT on your favor. Okay, and every quarter you're going to see we have a balance. You either have VAT to pay or VAT in credit in your account. Okay, again, only if your income is above 10,000 euros. What else can I still say about taxation on the short term? Sorry, but my point was, so next year it's that limit was enlarged to 12,500. So now you can be exempt until 12,500 euros. Okay, so only above that amount you will be liable for VAT. Also, there's another issue I'm going to try to explain to you, but basically, when you have a property in Portugal that you open an activity and start a rental activity, there's going to be a depreciation on that property that will be taxed. Meaning what? Meaning that you will accumulate a small capital gain every year by having that activity open. So if you start renting today, in 5 years you close your activity, granting that the laws don't change, the tax laws, you eventually have a small capital gain to pay. Usually it's nothing too big, but there will be a little bit of tax to pay in the end of your activity. The way around this, which is possible, according to the law now, is when you close your rental activity for holidays, you put your property in a long-term rental contract for 5 years. And if you do so, in the end of those 5 years, you are exempt of that capital gains regarding the holiday rentals that you made. Okay, so the taxation of the short term is basically this. The process, we open the activity, we then apply for the rental license. We have a company that goes and installs all the security items that are necessary. Once the rental license is issued, your rental agent can then now advertise your property and accept bookings. Okay, when they do so, they inform us of the bookings, so we can issue the rental receipts, and also they will also do something for you, which is a communication to SEF. SEF is the Borders and Foreigners Bureau in Portugal. Okay, so and every time we have a non-Portuguese person coming to stay in an apartment or an hotel or any sort of touristic establishment, they'll always ask you for a passport and take a copy. The purpose of that is to inform that bureau of the ins and outs of non-Portuguese in Portugal. By having a property with a rental license, you have that obligation, but your agent usually takes care of that for you. Just an additional obligation, just so you are aware of it. Okay. So our tax year is from January to December, 31st of December, always, and now we submit the tax returns until the end of June. Okay, we submit your tax return until the end of June, and if you have tax to be paid, your tax payment notification will come usually around August. Okay, for payment by that time. Okay, so that we start doing the tax returns at the beginning of the year, submit them. When the tax notification comes, we request the funds to pay that tax on your behalf. And for short term, that's it, basically. Okay. Now let's talk a little bit about long term. Long term, as it implies, so rents are going to be for at least a few months. You need always to have a contract with your tenants. That contract needs to be registered in the tax office, okay? And you pay 10% stamp tax on the rent amount that you define. Imagine you have someone that's going to pay you 500 euros per month. You're going to pay 10% of that, 50 euros, to register the contract. It's a one-off cost. It's a registry of a fee of the contract. And then it's pretty straightforward. So every month, your tenant hopefully will pay you your rent. We'll issue the receipts. At the end of the year, we're going to request, now yes, there's no simplified regime here, we're going to need expenses. What can we deduct? Utilities, basically, condominium, any repairs that you do into the structure of the property, tiles, a doorknob, a window, things of that nature. Not furniture, not appliances, no financial costs, mortgage that you might have on the property. Okay, I know that's a big one that you guys always ask. The financial costs in Portugal, unfortunately, are not deductible. Okay, we are very conservative on the expenses that we let deduct. With your computation on the net amount, you are going to pay 28%. Okay, it's a flat rate. We, as residents, we have the option to either pay 28% as well as a non-resident pays, or to add that income to our overall income as a resident, which for some people maybe can give a higher rate, some can give lower. So as residents, we have the ability to choose what we want. But usually 28% is the best option. Okay. And for long term, that's it. It's pretty straightforward. Okay. So I think we are ready to move on to taxes on sale, which is also not very complicated. Imagine you decide to have a property, either you have rented or not, you want to sell it this time. Imagine that you want to sell it for a profit. So the calculation is going to be very easy. You're going to have your sale price minus your purchase price. Okay. And then you deduct? You can deduct the expenses you made on the beginning, those taxes I told you about on the purchase, the IMT, so the transfer tax, the stamp tax, that's deductible. Any capital improvements you have made on the property, your pool, your kitchen, things that added value. Okay, so capital improvements to the property, that's deductible. and basically that's it. So, and then you're going to pay as well 28%, 20% of tax on your capital gain. And here you cannot deduct your mortgage. Okay, the mortgage is not deductible on the capital gain. However, if you are a resident in Portugal and you're gonna sell your main habitation, okay, your main residence in Portugal, you sell it, and you decide to buy another main residence. Okay, and you have 3 years to do so. You have 5 years to do so now, and 3 backwards. So if you had already purchased a property, imagine 2 years before, and now you want to make that property your main habitation, you can. Okay. What can you do? You can do a rollover relief on taxes. So you calculate your capital gain on your main habitation, and here, yes, if you have a mortgage, you can deduct that amount to your capital gain. Okay. And you're going to see the capital gain that you have. And then, depending on the amount that you reinvest, there's going to be a reinvestment coefficient. So, depending on the amount that you're willing to reinvest, you are only going to pay taxes on the amount that you don't reinvest. Let's imagine if you reinvest all of your proceedings that you receive from the sale, you have no capital gains at all. You just reinvest it in another property for your main habitation. Here in Europe, because you have supposedly to have free movement of people, capitals, and so forth, we can, a person, if it's a non-resident, if it's a resident here, but this has to be a resident now in France or in Belgium, country, they can do this in their country and reinvest there. That is not possible, unfortunately, with the United States of America. Okay, it's exclusive for European citizens. So capital gains in a nutshell, that's it. So taxes on property, general terms, this is what we need to talk about. Non-habitual residency in Portugal. Non-habitual residence was a program that Portugal developed to try and attract some investments, especially pensionists and people that have what we define by high value activities. There's a specific list of those activities. So what is this status? It's for people that want to become residents in Portugal, that haven't been resident in the past 5 years. They can come, they can apply, first they need to apply for residency, okay? And if you're not an European citizen, this is done through CEP, that institute that I told you about, the Foreigners and Borders Bureau. Okay, there's a whole process. It's not something that we really do. Usually it's lawyers, so they're more aware of the whole process, all the necessary documentation, but I know that you need to show proof, means of sustainability, economical affordability, and so forth. Once you become a resident, you can then apply for the status of non-habitual resident. From that point forward, you will be taxed here in Portugal on all your worldwide income. Okay. Pensions. This is a recent rule. It was not being taxed at all. Pensions. But now they decided to tax at least 10%. Okay. And the list of special activities. Let's imagine IT. A person from IT, from Google in Ireland, also come and live in Portugal and work from here. He will only be taxed 20% on his income. Okay. Again, all this information I can provide, the lists, all that information if you want it. Again, on the business status, why is this interesting? Imagine you're a pensionist in a specific country, and by moving from that country to Portugal, the country of origin says, okay, here's your pension, we are not going to tax you. Okay, you go and be taxed wherever you reside. You come to Portugal, you're going to pay 10% of tax only. Okay, and that applies for other incomes as well. Things that you will always be taxed here: dividends on shares of the stock market. Okay, will always be taxed at 28% on that, and other incomes we need to see case by case, depending on the country and on double taxation treaty that the countries have with each other. Okay, but it's been a success, especially for pensionists. Okay, we had very good results, and it's still available. This lasts for 10 years. It's 10 years. You can be on and off, so you can imagine your residency. You can cancel it or freeze it, go back. After a year, you come and resume the non-abuse residency from where you left it. Okay. Again, this is most interesting for pensionists. Okay. Obviously, it was more interesting before. It was 0% taxation. Now you have to pay a little bit, 10%, to benefit from that program. Okay. In the last couple of years in Portugal, all these taxes that I told you about have been quite stable. Okay. Although Portugal, sometimes always a little things that change with rates. Raises a little bit, lowers a little bit, but they've been pretty stable. Okay, especially for the rentals, so on and so forth. My point being that I do believe that this is the basis for taxation for the next couple of years at least. That said, we have now the situation with COVID-19, as you well know, and obviously this has taken a big toll on people that rent the properties this season. You know, at least so far. Maybe we'll see if we can still recoup most of it. So I don't know if they will try and do some sort of benefit tax-wise for the next couple of years, next year, to try and compensate the tourism sector. At the same time, Portugal has been putting people in layoffs. The government has been supporting with little money it has. So I do believe a tax rise may come as well. So I don't know. We are in uncharted waters at this moment for the future taxation-wise in Portugal and maybe around the world. This is it. Okay, taxation-wise, this is what I have to tell you. If I see that some people already requested my email, it's been given. If you have any queries, you can redirect them to me. I'm sure that Charlie and Megan and Tia have some questions that you might be making so far, and I'll be happy to now go through a few of them and answer what I can. All right?
Yeah, so thank you for that. So Ken is saying, when you say income, do you mean gross rental or the net income after the invoiced expenses? So I've said that 65% Portugal will class as expenses, and then you're only charged on the remaining 35%?
Yeah, so I'm talking about so you have your gross income, let's say 10,000 euros gross income, naturally, okay? Whatever you invoice to your final guests. From that, 65% will be considered costs, and the 35% will be the net income. So you only pay tax on the net income. Okay? So it's 25% of 35%.
And then Jeff is saying, how much does an accountant charge for carrying out a tax return for a non-resident?
For non-resident, in our case, it's very difficult because it depends if you are subject to VAT, if you're not. But the standard fee that we charge is 250 euros per annum with VAT included, which in Portugal is levied at 23%. Okay, so should be in that region. It depends if you have VAT. Naturally, we need to compute VAT returns. We need there's more work involved, so we always charge a bit more. Again, should anyone then be interested in our price plan, we'll be happy to provide.
I'm not sure if this is a question for you, but if not, we can answer it elsewhere. But Jeff is saying, if I build a house, how do the council value the property? On its actual cost or an assumption of its market value?
No. Its values. It's the price of the plot. Okay, so your purchase price, it will be the price of the plot plus all the invoices of construction that you have until the date that the habitation license is granted. Okay, so all the materials, all the invoices from the architect, everything that you have related to the property. Okay, plus the price of the plot is your purchase price.
In long-term rentals, can you add the income onto your global for tax rather than 28%? If so, can you claim the NHR tax relief on it?
No. that you can. But the income that you will earn in Portugal, even as a non-habitual resident, you'll be taxed. Okay, you'll be taxed here. This is for income from abroad. The interest of the non-habitual residency is for income from abroad, except for those activities that I told you, at least of activities that you'll only be taxed at 20%. Okay.
So I'm just trying to find all the questions, and we've got a lot as well that came through before. But so Ken is saying, on the last question you read out for me, I was asking about the VAT tax and the €10,000 threshold. Is the 10,000 for gross rental income or the net income?
It's for gross. The VAT threshold is for gross. 10,000, you can sort of forget the 10,000 will be 12,500, but yes, it's for the gross income always. Okay, gross income.
Mm-hmm. How easy is it to transfer from one accountant to another? From
How
both?
easy? It's pretty straightforward. It's not complicated because this is done by appointment at the tax office. You don't need permission or anything from the previous representative, so you can just simply change to us.
Hi Denzel. Hi, do we have a tax-free personal allowance on income tax like the UK, which is currently 12,500?
Sorry, no. We don't. The residents do but it's a very small amount. I think it's for incomes below 7,000, something like that. It's a very low threshold for people that really receive like minimum survivability wage, something like that.
Okay. Can you offset mortgage interest payments as expenses for tax returns? I believe you said no.
No.
How does inheritance work relating to property taxes?
Sorry, I didn't catch that, Charlie. Will you repeat, please?
How does inheritance work?
Inheritance.
Yeah.
So that inheritance is really not relevant in Portugal because we don't have inheritance tax. Okay, so it doesn't play any part. Okay, we abolished inheritance tax a few years ago. That said, that's a thing that I can add is if you have a property here, it might be wise to make a will here, just to make it easy for the inheritors, because we already have the will in Portuguese, translated, notarized. The inheritor, all he has to do is come to Portugal, grab his fiscal number with the copy of the will, and this will make the process a lot easier. But inheritance tax, there is in Portugal.
So the question that I said from Denzel, like the UK, which is currently 12,500, he said, so all of his pension will be taxed?
So, imagine you have a pension in the United States. You come to Portugal, and the United States says, I'm not going to tax you, please go be taxed in Portugal, where you reside. Sorry, you're going to pay 10% of tax here, 10%. Okay? If you have other incomes, okay, even though the pension is not taxed, or most of the pension is not taxed, it will contribute to find the tax rate to which you will go. And those other incomes will be taxed at the tax rate, your final tax rate, basically. So the pension will always, although not being taxed or only taxed at 10%, it will contribute for finding the tax rate for other incomes. Okay.
If income drops below 12,500, can you remain registered for VAT?
Sorry?
So if the yearly income drops below 12,500, can you remain registered?
Yeah, listen, the exemption of VAT, it's not mandatory. You can be liable for VAT voluntarily. You can say, look, I'm going to make only 5,000 euros, but I won't be liable for VAT. If you do so, you need to be there for 5 years, at least, okay, subject to VAT. And then that's it. Usually, in my opinion, is not worth it. Okay. And especially people think you're going to make an investment I'm going to buy furniture for the property. I'm going to spend 20,000 euros in furniture, and so I have a nice chunk of VAT to deduct. Fine, you can do it. But then those properties have a depreciation period, 5 years, 8 years. So then you need to leave the activity open, at least for that period, okay, to be able to deduct that whole amount of VAT. If you close the activity before that, you need to return some of that VAT back to the tax office.
From Harish, regarding the inheritance tax, if both husband and wife die, can the property be passed to children tax-free?
Yeah, here there's no taxation again. There's no inheritance tax in Portugal.
And I've just got one more kind of general question, and then I think unless anyone's got anything else, then we can just leave your email below.
Yeah.
Is there anything to be careful with or look out for? Like, is there anything to make sure you need to do before you come over and buy?
Yeah, actually, I would revert more that to yourselves, but obviously I think it's always a good idea, you know, to make sure if you want to buy a property, to make your due diligence, make sure all the documentation right, that everything is okay, that you know that you're buying, you know, that specific property, that all the documentation is right, number of rooms, so on and so forth. So yeah, other than that, taxation-wise, it's this. There's no hidden, nothing to be more aware of. This is it. It's pretty straightforward. That's it.
Okay. Has anyone else got any more questions? We've got a question here from Harish. Tax-wise, would you say it's better to attract long-term or short-term renters to rental property? Probably short-term.
Yeah. It always depends, right, on the property, on the location, but usually it's more profitable.
Yeah, in the Algarve anyway, I think it's more profitable to do short-term.
It's such a touristic area, you always have so many people that want to rent.
Mm-hmm. And then Jeff is asking if he can have a meeting with you, or would you prefer email?
At this moment, we can have a meeting by Zoom or some other video conference platform, but we can start our conversation by email, you know, for a presentation, and then we can set something up. Certainly, that's not a problem. We are still avoiding having meetings in person.
Everyone.
in the office, to be honest. Most of our staff is already back at the offices. But yeah, we are still avoiding the meetings. Now, long term, I can see here the conversation. Long term is 28%. Okay, short term. On short term is 25% short term, 28% long term. Okay.
I've got a question.
Yeah.
Can I speak? Yeah. Just a question about the inheritance tax. You say that to make a will. We've made a will in the UK, but shall we put our Fisco number on the will over here?
Excuse me, I didn't catch the end of the conversation. I'm sorry.
Yeah, you talk about the inheritance tax to make a will. We made a will in the UK.
In UK.
Do we need to put the Fisco number on the will, or
no, you don't need to put the fiscal number. But you made the will that you made in UK. Also, you have a property already here in Portugal.
We do, yeah. We do.
Okay, so there's nothing wrong with having the will in UK. Okay, what I'm saying, if you have a will here in Portugal, it just makes it easier not for you, but for whoever is going to inherit.
Yeah.
So it's just about bureaucracy. Because then we need to take the English will, we need to translate it with certified translation, and it's just more steps, you know, and it might be a bit more expensive, but it's not mandatory by all means. Okay, it's fine to have that's not an issue.
Thank you.
I'm just going to read out this question. Am I double taxed on retirement income in USA? So I'd be paying taxes in USA and then again in Portugal? I think you said no. So USA will say, if you're going to Portugal, pay your taxes there.
That's something that, because I'm not a USA tax expert, okay? Please confirm if you decide to move to Portugal and become a resident here, if in fact the USA will stop taxing your pension. If so, great, because you already know that you're going to pay 10% here. If they keep taxing you back home, if it's the same rate or a lower rate, but then plus the 10% from Portugal, so you need to see if it's really worth it. Usually, our experience is they don't tax, okay? In most countries, and I'll be honest, non-habitual residency is not within the company, it's more of my partner's department, so he probably has all those answers for all countries in his head, but usually pensions are not taxed. Okay, and you can bring them here and then be taxed now at 10%, before nothing, now 10%. Okay, but please confirm always before deciding to move from your home country how the taxation will be. Okay, so you don't have any surprise. Right.
Ken saying I was referring to taxes paid out on the rental contracts to local authorities, not the annual rental income taxes. You said long-term rental contracts have a 5% tax?
The taxes paid out on other rental contracts. No, okay, the rental contracts, you pay 10%. 10% on the rent, you define a rent amount on your contract. I give the example of 500 euros. So you're going to pay 10% of that, one-off cost, just to register the contract. Okay, 10%. Wanted to know for short term. No, short term, you don't need to register any sort of contract because there's no contract at all. Okay, contracts is only for long term. Me, property owner, and the tenant make a contract. We register that contract. We have a compromise. We define a term, rent amount. For short term, no, short term is bookings. You know, it's different. There's no, you don't need to pay anything to the tax office.
So one more question, and then I think if anyone has any more questions, you can answer them over email, because I think everyone's situation is quite different. So this is from Harish. Will a no-deal Brexit make a difference to the NHR scheme?
Will what, sorry?
Will a no-deal Brexit in the UK make a difference to the non-habitual residency scheme?
Sorry, Charlie. What Brexit? Sorry.
Huh? With Brexit.
Oh, with Brexit. Sorry.
Yeah. Will it change the NHR?
What will change is becoming a resident in Portugal for a European citizen is quite easy. Okay, if you're Spanish or Belgian or French, you just come here, you go to the local city hall, prove that you have a rental contract or that you have a property here, and they issue a European residency certificate, and boom, you're a resident. If you're outside of Europe, now you have to go through that CEF bureau, that foreign in bureau. So it's a bit more bureaucratic. So the process of becoming a resident becomes more bureaucratic for UK citizens. Okay.
And when does it? At what time does it change from a short-term to a long-term rental? Is it 3 months?
No, I believe you can do short term up to a month.
Up to 1 month.
I think that you can do short term. Megan probably can confirm that, but I think it's 1 month. I think so. I think it's 1 month.
And then the tax changes.
No, the thing, if you're going to make short term, you have to do short term rentals. That's it. You cannot make. You cannot say that you have a short term rental and then state that you had a client there from January to June.
Yeah. Yeah.
Okay, so obviously then you need to set up for what you're going to do, naturally.
Yeah, if the booking goes over 30 days, it becomes classed as long-term. So anything up to 30 days is short-term. If somebody proceeds to stay for longer than that, then it's classed as long-term.
There you go.
Okay, thank you everyone for joining. We'll leave the emails below again.
Right.
So I will put yours, I'll put mine, and I'll put Megan's. If anyone has any more questions, please just let us know.
Thank you, everyone. Yeah, send me an email, and we can go from there.
Thank you.
Thank you.
Cheers. Goodbye.
Bye.